What's going on? What's up, John? I think it was just that one guy that was annoying. Most of the other people were pretty chill. Can you hear me all right? Are you seeing the screen all right and everything? I know there's a bigger delay here on YouTube when I speak, so I think it takes like an extra like 15 seconds delay between me speaking and you guys hearing. That's the only thing I don't like about the OBS stuff is it is a little bit slower. I also can't. I also don't like that I can't see how many people are in the room. That's always annoying. Like I can't see as people join the way I can in other platforms. This one doesn't show me. Like I'd have to go and log in somewhere else, I think, to be able to see. What's up, Derek? How you doing, man? Oh, all right. If there's anything you guys want to check out, just let me know in the chat, guys. Whatever you want to check out, and we'll check it out together. What's up, Piero? Baba. Yep, let's go check out Baba. BABA. Baba's super choppy typically. So we'll see what this looks like. Audio's a little softer. I can probably increase the gain on my mic. I was just leaving it default because sometimes it saturates easily, you know. Here. I'm just literally putting 1 dB more. See if that makes a difference. What's up, Juan? Does that sound better, Futures? Yep, we'll check out Baba. Let me know if that makes a difference. I literally only did 1 dB, so maybe it's not a big difference. Well, you guys tell me in the chat afterwards. All right. So here we are. We're looking at Baba. Let's clear the charts. We'll start from scratch. We'll do it together, guys. Start from 0. Whenever we start, maybe we'll start from 0. There we go. Whenever we do our analysis, we always want to start from a top-down approach because higher time frames do tend to be more powerful than lower time frames. If anybody is new to trading with us here, the way we teach trading here at Phantoms is the way we were taught to trade working on the professional side of the industry. Oh, I'll show you in a second, Derek, because somebody else asked that too. I'll pull up NQ after this. So what are we looking for first? We're looking for areas of institutional order flow. Where are the major banks institutions buying? Where are the major banks institutions selling? Do we have an opportunity to buy and sell together with them, right? So here I am on the monthlies, and you can look right here. I have this continuation pattern right here. Can everyone see this? Impulse in, balance, impulse out, right? Area of institutional buying right here. Some big banker institution bought heavily, driving price action upwards explosively on Alibaba and leaving behind a high probability of unfilled orders. Now we have already come back in, hit those unfilled orders, and rallied right back out because if there's an imbalance of more buyers and sellers, price goes up. On that retracement, on that first hit, we also created a little bit of zone creep there. So slightly higher zone formed on the retest. On the supply side, technically, that is supply. That is a supply zone. It's not a pretty supply zone, but it is a valid supply zone. Can everyone see the impulse and then balance and then impulse reversal? That is an area of institutional selling. Now, is it something we like? No, we don't like these big, broad zones with deep wicks like this because, first of all, we're filling a lot more of the orders. The structure isn't as impulsive. It's just not as good a level. But it is what it is. It's what we have right now. That's what we have. We don't get to ignore the zones just because we don't like them. So institutional buying, institutional selling. Let's drill down to the weeklies here on Alibaba. And what I'm looking for on my ETF is I'm looking for trend and I'm looking for correlating structure if there is any. So first things first, looking here on the weeklies for Alibaba, what is my trend? Is this, pardon me, sorry about that. Is this an uptrend, a downtrend, or a sideways moving trend, guys? You guys tell me in the chat, up, down, or sideways, what's happening here? This was the control point for the uptrend previously, just so everyone's clear. So that was the control point right there. So you can see we broke past that control point, right? Yeah, we've established an uptrend. I mean, it's a tentative uptrend because this candle is still active, right? But I have broken past control of the previous downtrend. We had a downtrend, and then we established an impulse, a little correction right there, and so far an impulse. So as long as this candle holds bullish like this, as long as it's establishing a new high, we will have an uptrend. Problem is, it's Tuesday, right? So there's a lot of week to go still. This candle could reverse. So how should we treat it? We should treat it as directionally neutral, leaning towards a potential uptrend. Does that make sense? Because it's not an uptrend yet. This candle is still active, and if this candle reverses, then I don't have an uptrend. So we're technically currently neutral, leaning bullish. Is everybody with me on that? Does that make sense, everyone? But the actual trend right now is neutral. Cool, cool, cool. So with that in mind, what does that mean for us? It just means we have no bias. Thank you for the likes and all the stuff, guys. That does help us, by the way, as well. So we appreciate that. Do I have any order flow here on the weekly, especially as we start to try and build out? I don't know how much longer TikTok's going to be around, man. We'll see if they make a deal or not, but I don't know. I'm less optimistic. I think we have to start working on our other social media channels. On the sell side, unfortunately, this little level right here, we've already candle closed through it. So that one's no longer valid, which means the next one is all the way up here, and I do not like this at all. I don't like when we gap out of basing. That's not what I'm looking for. So that's not great for us. But it is what it is, man. It's what we have. So institutional buying, we've gapped out. It looks like we already hit it, didn't we? Did we hit this already? Ooh, that is close. So is that a hit, guys? Should we consider that a hit? I know I would, right? That is way too close because we have to have common sense about what we're doing. If I have something come within a whisper of my level and then shoot off explosively, I consider that a hit. I would make the adjustment to my zone like that and I'd say that's my actual zone. I'm the one that's off by a few pennies, especially if it's within a gap like that. So I would 100% consider that a hit. It's already been hit once, which means if price comes back down here, it's going to change the type of entry we place. So we're very interested in seeing if we've hit a level or not because it does affect the type of entry. And this is something somebody was asking me over on TikTok, was different types of entries for different types of setups. That's exactly what I mean. We will have a different type of entry if price retraces back to this level. Finally, we're down to the dailies, and this is where we're looking for an actionable trade if there is one. This is where we're looking for an actual trade to get in on our lower time frame. So we started on the monthlies for our higher time frame. We drilled down to the intermediate time frame on the weeklies, and now we're down to the dailies looking for actual entries. So looking here, do I have any order flow here on the dailies? I have this impulse, balance, impulse continuation pattern right here, right? Area of institutional buying, driving price action up. It's not bad. Beautiful strength of movement. What's my problem with it? What don't I like about this? Wicks cannot break zones. Only candle close can break a zone through the same time frame or higher. Wicks can test zones, so wicks will affect the purity of zones. Wicks will fill orders, but wicks do not break zones. To break a zone, you have to have a candle close through the zone on the same time frame or higher. So what's the problem with this level right here, guys? Anybody? Nobody knows? You guys should know this. Some of you definitely should know this. It's already been hit. We gapped out and came back in. That is the first hit right there, right? Because gaps count. Gaps are simply impulsive moves that are occurring outside of market hours. So that is the first hit right there. That was the first. That was the first hit. If you were going to take that trade, that was the time to take that trade. Now, because I've penetrated so deeply into the zone, if price comes back to this level, could I still have a potential trade on the zone? Yeah, I could still have a potential trade, but because it's already been hit and deeply penetrated once, now I would only take a confirmation trade if I were to trade this level again. So a confirmation trade means if price comes back down here, I'm not going to take it as soon as it hits the level. I would actually wait for a candle to close out of the zone bullish. So I'd basically be waiting for something like this. I'm just going to draw it as if we're drawing the candle, right? I'd be waiting for a hold on, let me take away the extension. That will make more sense if I don't have this extension to the right. Make it into a little bullish candle. Make it solid so we can see the color. Make it match the other colors. There we go. I would need that to happen. I would need it to come back in. There still be enough unfilled orders for it to push price action out and for it to close out of the zone. And depending on how big the candle was, that would affect whether I'd be willing to take the trade or not. Does that make sense? Because it's going to affect my risk reward ratio. So like, let's say it did that. Let's say it comes back down and it does that, and my target is all the way up here at the supply. Everything is going to be relative to the structure of that candle if we get a confirmation trade. If I get a candle right here, as it is, right now, I'd be looking at about a 3.8 to 1 if it closed like that. But you can see how quickly the risk reward ratio goes down. If it closes a little bit further out, right, now all of a sudden I'm under 3 to 1. So my room is basically about to there. That's about as much as I can take in a rally out and still have a trade that gives me enough profit in comparison to my risk where the trade is worthwhile as a confirmation trade. But that's what I'd be looking for in terms of confirmation. So that's what we have on the buy side. Down here you have correlating structure as well. You have this correlating structure right here. This is actually an interesting level because that is multiple time frame correlation, zones on top of zones. And if there's one thing we love, guys, it's multiple time frame correlation, right? We love zones on top of zones because they form stronger levels of imbalance. This is an interesting one. Look at this 8610. Daily, weekly, monthly correlation, zones on top of zones on top of zones, stronger levels of imbalance where the order blocks overlap each other. Beautiful breakaway. That's an interesting level, man. That 8610 exactly changes the risk to reward depending on how much of an impulse out it creates. And this is assuming we're coming back down here, not forming supply. Like there's so many things that could happen beyond this, right? Because what if we come back down and we form a supply zone right here? Well, then that kills any risk to reward ratio. That trade's done, right? So it's like a lot of stuff has to happen for this trade to still be viable as a confirmation trade. We'd have to come down clean. We'd have to have a reversal that closes within this little sliver, and then we'd have a viable trade to go long. Right? That's why it teaches you the importance of first hits. Like first hits are so much more valuable because you're having that first opportunity, that first crack back at these major levels of institutional order flow, so you're able to take advantage of those unfilled orders. If I've already hit a level, then I'm changing my approach to it. What's another reason I would want to wait for confirmation? Another reason is this helps me avoid liquidity traps, right? Because if I have a test level that's retested more than once, sometimes what that will form, depending on the structure, is support or resistance, right? And that can lead to levels where banks will purposefully try and trap retail traders out because they understand how retail traders trade. So they will push price through certain levels. That's why a lot of people, when they first start trading, they will make that statement where it's like, man, I swear it's like the market's out to get me. It's like as soon as I place a trade, the market knows what I'm going to do, moves just enough to knock me out of the trade, and then it goes and shoots off in my direction. Yeah, you're correct. They absolutely know what you're doing. They will absolutely target you. They will absolutely push price through levels just to knock you out, right? So you want to be cognizant of that. Institutional selling here, we've already hit it once. So we've already come out, hit the impulsed out, right? Leaving behind unfilled orders, came back in, hit those unfilled orders right here. That was the first hit right there. More sellers and buyers, push back out. So now we just came back in for the second time to the supply zone. At third time, hit again, push back out, and now we're in for the third time to supply zone. So a little bit beat up. Am I willing to trade this short? Not really, especially with institutional buying right here. I have no interest in trading that short. So I would not be willing to take that trade anymore. The only ones that are viable to me are potential confirmation if you get down here at the, what is that price? 90.59. But really the one that actually interests me is this one right here. Multiple time frame correlation with a breakaway. Good strength of movement. I mean, look at this. Beautiful strength of movement out. Broke past the opposition leg in. Very little time spent. Daily, weekly, monthly correlation. Never been touched at the 8610. That's an interesting level. That's the one I'm most interested in. So that's the one I would keep an eye on. Obviously, we're far away from that. We're all the way up here, right? So for price to come back down here, you'd have to keep an eye, see what the retracement looks like. And what I would do in this circumstance is I would set an alert for myself probably at about 87.50 so I could see if price comes back down, how it retraced and what that structure looked like and whether the trade is still interesting to me at that point. So that's the way I would treat this level. I'd set an alert for myself at 87.50 and then reevaluate whether I still want to take this trade at that point. Cool. So that's what I got for you on Alibaba. For NQ, the level we were looking at was this one right here. Oh, it's so much slower on OBS, dude. Whenever you're ready. There we go, TradingView. So we were looking at this one, man. There is this level up here where we had 5-minute, 50-minute, 1-hour correlation. It spent more time in the level than I would like it to. So we did spend a lot of time, as Wyckoff would say, distributing. But it is still an interesting level. So we have, I'm just going to zoom in a little bit more so we can see it. This big box is the hourly. This is a 15-minute, as is this. This is another 15-minute. And then these are the 5s. Now, I didn't redraw the 5s because it's dressed on top of the same structure. Like, it wouldn't change my zone at all. It would be the exact same box, just a little bit more to the left. So we have 5-minute, 50-minute, 1-hour correlation. I wish we hadn't spent quite as much time here as we did, because we did spend a lot of time basing. But besides that, it's a pretty nice, strong impulse out. We have not come back and retouched it. So I look at this as a potential short opportunity if we can get back up here to go short at the, what price point is that? Sorry, I'm trying to click on it so I can see it. 21,906.25. So that's what I'm looking at, man. That's 5-minute, 50-minute, 1-hour correlation. Time's a little bit more beat up than I would like it to be, but still, nice MTFC, good strength of movement, hasn't been retouched yet. Really, the only negative to that level is the fact that it's already, that we spent so much time before exiting. That's the only downside to it. Obviously, of course, as always, have to see how price comes up there, right? Because if we set up a demand zone along the way, that might kill our risk to reward. But as it stands right now, plenty of profit in comparison to the setup, so it's looking pretty good as it stands. The one down here has already been hit. So the one down here, because we did have a demand zone down here as well, that one's already been hit. We've already come back in, hit the Enfield orders. That's the 5-minute, 50-minute, 1-hour correlation. Just boom, popped right back up. So this one already happened. But that supply up there has not happened yet. Although it did happen up above on the previous level above it. So the level above, up here, that higher 15, that one's already been touched. But this one has not. Cool, cool, cool. Anything else you guys want to check out? Let me know in the chat. If you have any other tickers, anything else you want to check out. This is the only painful part of YouTube, guys. It is slower. So slow. I wonder if there's a way to speed it up. I think they just keep a delay. No problem, Derek. I think probably for buffering they keep a delay, you know? But I wish I could make it faster. IWM? Sure. Let's go check it out. IWM. All right, so here we are on IWM. Let's start on the monthlies on the Russell. As always, higher time frames first, because higher time frames tend to be more powerful than lower time frames. We already did SPY, Chico. That's already done, my man. I don't remember what our conclusion was on SPY. Does anybody remember what the conclusion was on SPY? No good structure on the monthlies here for the Russell. Let's drill down to the weeklies. Oh yeah, you want to check out Apple. Let's go check out Apple after this. So there's weekly supply. We've impulsed out. Did that hit? That came very close to hitting right there. I would actually consider that a hit if it didn't hit. Yeah, it's just slightly below, but I would still consider that a hit. Ooh, well that level hit once, popped out, hit twice, popped out, and then we broke it. All right, let's just clear the charts. We're gonna have to, rather than me deleting what's broken, what's not, it's just easier to just start from scratch. All right, so here we are on the weeklies for the Russell. Do we have any clear order flow here on the weeklies? Well, I have this level of institutional selling all the way up here at the top, right? This one right here. But realistically, that's also a level. That's also a level of institutional selling right here because you have this nice gap down before they open, right? So there is a level right here as well of selling. This is oh, it's already marked red, so I don't need to mark it again. Of institutional selling. On the buy side, no. Not the best, is it? Not the best structure right here. Did we break this? No, we haven't broken it either. It's a weak impulse. Don't love it. Don't love it at all. It's the best we have. It is what it is. I mean, realistically, you could even argue this little impulse continuation right here, but it's still ugly, right? Ugly level. And just really retested multiple times. Either way, there you go. Demand, supply. We got our weeklies done. Let's drill down to the dailies. Dailies are going to act as our ITF here. So we're going to evaluate trend and correlating structure here on the dailies. So here I am on the dailies on IWM. Do I have, well, first of all, what's my trend here on IWM, guys? You can see how much choppier the Russell is, right, guys, in comparison to other indices. I know this is the ETF, but you get the point. Super choppy in comparison to other indices, right? What's the trend here, guys? Up, down, or sideways? Oh. Man, this is messy, huh? Might be easier to just say it. Because I keep forgetting how long the delay is here. It's so much slower to converse on YouTube. All right, it's currently consolidation. So, we had an uptrend, then we broke, we established a downtrend, then we broke it, then we established a little uptrend, then we broke it, and we have an actually a little tentative uptrend being established right now if this candle closes bullish, right, with that little correction. But still sideways overall because it's not closed yet. Do we have any order flow here on the dailies? Yeah, ish. You have this impulse balance, impulse continuation with that big gap right there, right? So big gap out of this level. And because it is a green continuation, right? Because gaps are simply impulsive moves that occur inside of market hours. So it's like impulse, balance, and then impulse. Because it is green, and we are on the daily time frame, I'm going to drill down to the 4s to make sure that this is a valid level of institutional demand. And what I'm basically going to be looking for on the 4s is I'm going to be looking for oppositional pushback. So I'm going to drill down to the 4 hours, and what I want to see is red candle pushback in this area. Because I want to see exactly this. I want to see a fight between buyers and sellers where buyers won. Does that make sense, everybody? Can everyone see what I mean by oppositional pushback? Can you see how buyers are buying, sellers are selling? They were fighting it out, but eventually there were more buyers and sellers causing price to rally. Does that make sense, everybody? So that's exactly what I'm looking for to confirm that level. So that is indeed a valid level of institutional demand right there. Let's go back to the dailies here. So we have our daily demand that's valid. On the supply side of things, do we have any order flow? Yeah, you do. You have this little drop, balance drop right there, a little area of institutional selling. Again, weak impulse out, and it's been retested multiple times. Look at that. Some banks sold, driving price action down, leaving behind unfilled orders. Price came back in, hit those unfilled orders, pushed back out, came back in a second time, pushed back out, came back in a third time, pushed back out. So 3 hits to that supply zone already. Finally, we're getting down to the 4s, and this is where we're looking for an actual entry, if there is one. Not typically the way it works, Jared. So dollar correlates with the stock market about 38% of the time. So positive correlation about 38% of the time, negative correlation about 62% of the time, right? So most of the time, the US dollar and the stock market tend to have an inverse relationship, especially over the last several years. And that there's several reasons for that. One of the easier ones is when the stock market is having a bad time, when the stock market's, so to speak, crashing, what are people's reactions? What does the average person start thinking if the market's crashing? If they have a position in the market, what do they think? They think, oh my gosh, it's the end of the world. I got to sell my position, right? And then they further perpetuate that crash, right? Causing it to drop more dramatically. That's why the market goes down so much more quickly than it goes up. People panic. They get nervous. When you sell out of a position in the stock market, what goes into your account? Dollars, right? So now you are transitioning from equities into Forex currencies. People also purposefully do this because the dollar and gold are considered more safe havens during volatile times. So they will also do that, right? Like Warren Buffett famously moved, I don't know, a couple $100 million to the Japanese yen during the pandemic because he was trying to protect his downside and essentially diversify across multiple asset classes. So like it tends to have an inverse relationship most of the time, but because the dollar is the world's reserve currency, it can't have a completely inverse relationship with the stock market because it is still the world's reserve currency. There's only so low, like if the market keeps rallying, it can't just keep dropping, right? So it has about a positive correlation about 38% of the time, negative correlation about 62% of the time. So almost like 1/3, 2/3 type thing, right? All right, so here we are on the fours. Do we have any order flow here in the fours? I mean, we have this correlating structure here. It literally doesn't change the zone at all. And you have this other little standalone little guy right here. Look at that little guy right there setting up. Obviously, this candle is still active, so we'd have to see what this closes out at 1:30 p.m. Maybe a potential trade there as well. We'll check that out. On the supply side, I don't think we need to worry about drawing these levels. We've already tested these levels too much. We're not going to trade the supply anymore, right? So we're looking at basically, can I trade this long or can I trade this long? Now, what's the more interesting of the two? The more interesting is where I have multiple time frame correlation, but I don't know if my risk reward ratio justifies because it's a little bit of a broader zone. So let's see what the risk to reward on this is. If I were to take this long from here, if I were to take this entry at the top, stop loss at the bottom, and realistically I'd probably want to take ATR into account for IWM as well, and I were to target up to here to the supply zone, and this is all assuming price comes back down, that's only 2.7 to 1 reward to risk ratio. So like from a profit perspective, it's just not a lot of meat on the bone for me. Not really worthwhile. Now this little standalone forward, this little guy right here, I'm going to have to drill down because it is again a green, green, green continuation. And anytime I have a green, green, green continuation on the daily time frame or lower, I have to go down to lower time frames to verify the structure. So I'm going to go down to the ones, and the same way we were looking for this oppositional pushback here, I'm going to be looking for oppositional pushback right here on the 1 hours. So I'm going to drill down to the 1 hours, and what I want to see is a fight between buyers and sellers, red candles and green candles fighting it out. And we do have the fight. There is indeed a fight between buyers and sellers. But did this help us? Does this level look interesting to us now that we've drilled down to this detailed time frame to see the structure on it? Am I excited about this trade anymore? Not at all. Because think about what's happening here. I have this impulse in, and then balance, 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 impulse out. So now look at the zone I've just formed on the hourlies here. Well, now I've just crushed any sort of reward to risk ratio I could have on this trade. Does that make sense? So now this looks terrible. And this is why we look at multiple time frames, because sometimes you'll have something that looks good on 2 time frames, and then you get to that 3rd time frame and it doesn't look so good. So that's a great example of that. So for me right now, man, I wouldn't be looking at any trade on this. Maybe you could take this little short. It's too close. Not enough profit. Too long wick. No, never mind. You can't take that short. You can see it reacting off of it, by the way. Look at that. It's already bouncing off that little hourly right there. Look at it hitting those unfilled sell orders and getting a little bit of a rejection back out. But we would never take that trade. The risk reward doesn't justify the trade. So that's what I have for you on IWM, man. Not a lot. I wouldn't really take any of these levels right now. This one here is no good in terms of risk reward, and the one below is also no good in terms of risk reward. Basically, everything doesn't look good in terms of profit versus risk. So that's the real issue we're facing there. All right, let's go check out Apple, AAPL. already, TradingView. You take your time, man. No rush, I guess. Dude. I don't know what it is about OBS, but dude, it slows things down so much, huh? Man. All right. You want to check out what time frame you said on Apple? Are you on like the dailies or something? Is that what you were looking at? I think this was actually a 4-hour daily correlation, right? I think I might have it. Do I have a pending trade on this, guys? I think I might have a pending trade on this, if I'm not mistaken. Yeah. I think down here. Are we setting up a new demand zone? Yes-ish. I mean, it could. It's going to depend on how this candle closes, right? If this candle closes impulsive, then yeah, we just set up a new demand zone. Look at that. Somebody's buying right there, right? So potential demand zone being formed. We'll see. It's going to depend on how that candle closes. Let me just see the fours. So I can tell you in terms of what I'm looking at for Apple, I'm looking at this 4-hour daily weekly correlation down here. I actually, for me, from my perspective, I was very concerned with this basing here yesterday because I was thinking it was going to screw me over for my demand zone trade right here. I like this level down here. This is an interesting level down here at the 227.79. That is 4-hour daily weekly correlation with the breakaway gap. Beautiful strength of movement. Broke past opposition. Very little time spent. Like, these are the types of trades I look for. The only negative I have is this higher time frame. The dailies and the weeklies over here have already been retested, right? But I still like it. Still a viable level. It's just going to depend on risk reward, right? That's what it's going to come down to. So I don't know if this is going to come all the way up to the supply zone or not. Maybe it turns back down and comes back down. I can't predict the future, right? But if this holds, then it's forming a demand zone up here, and then we'll see if it manages to come back down to this MTFC or not. But that's the one I'm interested in. This one right here, it's tentative, right? It's going to depend on what this candle does for the day. So it could form a new Z level. Cool. But the one I'm more interested in, that one down there, the 222.79. But yeah, we might set up a zone here. It looks like we're setting up a zone at least, right? Looks like a nice tentative zone here. On the fours, we'll mark it yellow bordered so that we know that that's still tentative. There we go. I'm doing great, the cool. Thank you, man. Coinbase? Sure. We'll do Coinbase and then I'll go do nothing. Those are my big plans, guys. I got nothing to do today. Don't think I'm sad about that. I'm very pleased with that. I like having nothing to do. All right, let's go Coinbase. I don't remember, John. It is on our, I believe I put it on the trade picks. It's on the trade picks sheet, brother. If you just go to the trade picks, it's on there. All right, so here we are on Coinbase. Let's start on the higher time frame first. Oh. Monthly supply still looking good. Monthly demand still looking good. All right, so demand looks good on the monthlies. Supply looks good on the monthlies. Let's drill down to the weeklies. See what the weeklies give us here on Coinbase. On the weeklies here, we had a downtrend, and then we broke it, right? And now we haven't established a new trend as of yet. So currently non-directional. All right, so we do have correlating structure here. Look at that beautiful impulse bounce, impulse bounce. We already hit it, so it doesn't matter. That was the first hit. Look at that beautiful first hit to the weekly monthly correlation. That was pretty sweet, huh? 9.7 to 1 reward to risk ratio. Nice trade there. On the sell side, apparently we have correlating structure over here somewhere. Oh, there it is. Yeah, nice clear pivot reversal, impulse, balance, impulse, weekly, monthly correlation. Nice level. Not a bad level at all. I like that weekly, monthly correlation. Problem is we already hit it. Hit it right there, popped right back out. So we've already hit both weekly levels here. Now here formed a little bit of a weak pivot reversal with that gap right there, and it's already been retested, so not super excited about that level right there. Let's drill down to the dailies, see if the dailies give us anything actionable here on Coinbase. There's your Wyckoff. Distribution, spending a lot of time before impulsing out, and we've retested it already, so don't love that. On the buy side, you do have a little bit of a weak continuation right here at the 261.73, so that could be a potential trade. You do have daily correlation up here as well, but I could be wrong, but I think, let me just make sure. I think there may have been a retest on this back here. Let me just check to make sure, because maybe not. Might be good in terms of purity. Scrolling, scrolling, scrolling. There we are. No, that, oops, too far. Too far. That's viable, man. It did come very close with this wick, though. What's the high there? 355.20. What's my entry here if I were to take this? 357.39. It's still far enough away. Potential trade there at 357.39 to go short. It sucks that the 15, pardon me, that the weekly day, the weekly monthly has already been hit, but that daily weekly monthly has not been hit. So potential short 357.39, assuming risk reward justifies it. Potential long right here on this standalone daily at the 261.73. What's my risk reward on it? 4.81. So there's enough profit on it, although we set up supply since then. So we've set up a new supply, so that will actually affect our risk reward. Never mind, because that zone has not been broken. Which means I'm basically trading down to here now, and that's still above 3-1, so still potentially viable. Although no, with that retest, kind of create a little bit of zone creep on that retest, right? And that screws the trade. That's going to be a 2.9 to 1. Whatever. It wasn't a good setup anyway. Let's see down here on the buy side. On the buy side, you do have another level that was formed right here. All right, look at that little daily level formed right there. This one is not as interesting. This one's, you already retested it. That's what that first hit was right there. But on that zone creep retest, you have a little bit of a level. So potential trade right here if we can get back down to, I think I have to take it with the wick, 182.88. That could be a potential opportunity to go long as well, depending on how price traces. So that's what I have for you on Coinbase. 27 new support. What do you mean, Rishi? Where are you looking right now? Are you looking over here somewhere? I don't know where you're looking, brother. Like, what are you seeing at 227? Well, I don't see anything else. I think John was talking about Apple from before, if I'm not mistaken. We're on Coinbase now, though. But there's nothing over here on Coinbase. At least not in this time frame. Cool. All right, guys. That's about it. I'm going to go chill out, do nothing. Thank you for all the likes. Appreciate the support to help build out our YouTube channel here. If anybody wants to learn more about trading, workshop Thursday night for anybody who's new. I know most of the people in here are already members, but if anybody is new to Phantoms and you're interested in learning more about trading at a professional level, you can register for a free workshop this Thursday at 7 p.m. Eastern. I will be teaching it myself. Just go to our website, TradePhantoms.com, click this purple register here button, and in that workshop,